That is what one Bitcoin costs you today in November 2025. A fellow called me last week asking if he should mortgage his house to buy 10 of them. His nephew supposedly made $3 million trading crypto and now drives a Lamborghini. He wanted to know if I thought Bitcoin would hit 1 million per coin, like all the so-called experts are predicting. I told him the same thing. I am going to tell you, the question is not whether Bitcoin can reach $1 million. Tulip bulbs once cost more than houses in Amsterdam. The stock of Pets.com went from $11 a share to a $300 million valuation before disappearing entirely. Prices can do anything when speculation takes hold. The real question, the only question that matters, is whether you will still have your money when the music stops. In my years of building Microsoft and investing, I have learned one immutable truth. When everyone at the party thinks they are a genius, someone is about to lose their shirt. I can actually make a better argument for Bitcoin hitting $1 million than most of the people buying it. Most Bitcoin holders I have met cannot explain why they own it, beyond ideas like number go up and everyone is buying it. But the smart ones, and there are smart people on that side, build a case that sounds very compelling. If you do not look too closely, Michael Saylor's put around $60 billion of his company's money into Bitcoin. That is not pocket change. BlackRock, the biggest asset manager on earth with about $10 trillion under management, is now offering Bitcoin exchange-traded funds. Standard Chartered has forecast Bitcoin hitting $200,000 by the end of 2025. Kathy Wood at ARK Invest talks about Bitcoin reaching several $1 million over the next 5 to 10 years. Robert Kiyosaki is predicting $500,000 by next year. Tom Lee at Fundstrat sees similar numbers. These are not anonymous commenters on the internet. These are people with real money and big platforms. So before I explain why I still would not touch it and why I think it is ultimately heading to zero, let me show you what they are seeing. First, the scarcity argument. Bitcoin is mathematically capped at 21 million coins. No central bank can print more. No government can inflate it away. Around 19.9, 4 million have already been mined, so we are getting close to that ceiling. Bulls say this makes it better than gold. With gold, if the price rises high enough, you can dig up more. Discover a huge deposit and you increase supply. You cannot do that with Bitcoin. Michael Saylor has bet his entire company, MicroStrategy, on that thesis. He says Bitcoin either goes to zero or 1 million, and he is putting his money where his mouth is. Then there is institutional adoption. When I first started warning people about Bitcoin, it was mostly individual speculators trading on fringe exchanges. Today, BlackRock offers Bitcoin funds that already hold a meaningful portion of the total supply. Fidelity lets people put Bitcoin in retirement accounts. El Salvador has made it legal tender. Bitcoin funds and products together control a noticeable share of all existing coins. The comparison people make is to the early internet. Yes, there was a dot-com bubble and most companies went bust. But the internet itself changed everything. If you had held Amazon, Google or Apple long enough, you would be extremely wealthy today. Bitcoin believers say we are at that same turning point for cryptocurrency and blockchain. They talk about decentralized finance, often called DeFi, where banking, lending, and trading happen without traditional institutions. Smart contracts on Ethereum execute automatically. It is peer-to-peer lending and trading on a global scale. They say this will transform finance the way the internet transformed information. Then there is the digital gold story. Gold has an $18 trillion market value and has been a store of wealth for thousands of years. But it is heavy, hard to move, and costly to store safely. Bitcoin lets you send $1 billion across the world in minutes for relatively low fees. Bulls say that if Bitcoin captures even a fraction of gold share as a store of value, prices in the hundreds of thousands or even $1 million per coin are possible. Monetary policy is another pillar of their case. During the pandemic, governments printed trillions. The money supply exploded. When central banks can create unlimited currency, people naturally look for something that cannot be inflated away. Bitcoin supply is fixed by mathematics, not by politicians or central bankers. And then there's the survival argument. Bitcoin has been around since 2009, 16 years. It has survived hacks, government crackdowns in China, and multiple crashes of 80% or more. Every time skeptics declare it dead, it comes back. There have been hundreds of so-called obituaries for Bitcoin, yet here it is, trading above $100,000. That kind of persistence makes even a skeptic like me pause. The network effects are real. Bitcoin has the most computing power securing its network, the deepest liquidity, and the strongest brand. When people think cryptocurrency, they think Bitcoin first. In technology, the winner often takes most of the market. Think Microsoft with operating systems, or Google with search. Maybe Bitcoin becomes that dominant winner in digital money. On top of that, Bitcoin's program scarcity is reinforced by something called halving every 4 years. When mining rewards are cut in half, that reduces the new supply coming onto the market. Historically, major bull runs have followed these events. The most recent one was in 2024, so bulls claim we are in the sweet spot for another surge. I will give the bulls this. They are not just making things up. There are real developments, real institutional money, real technological innovation. The question is not whether blockchain might be revolutionary. It probably will be. The question is whether Bitcoin specifically is a good investment at $100,000 a coin. Here is where I draw a sharp line between investing and speculating. People say, I am investing in Bitcoin. No, you are not. You are speculating. I do not say that to insult anyone. The difference between those two words is the difference between building wealth and gambling it away. When I buy a stock, I am buying a piece of a business. It has assets, employees, products, services, revenue, cash flow, and ideally, profits. Those profits can be reinvested to grow or paid out as dividends. The beauty of productive assets is that they compound. If I buy a farm, it produces crops every year. those crops can be sold. The money can buy more land or better equipment. The farm becomes more valuable because it produces more. The intrinsic value rises. That is how Microsoft was built. We created software that people needed, generated revenue, reinvested in new products, and built a durable business. Now, ask yourself, what does Bitcoin produce? Nothing. It does not manufacture anything or employ workers or generate cash flow. You buy one Bitcoin at $100,000. And you are hoping someone pays you $110,000 or $200,000 or $1 million later. But the coin itself does not create value in between. That is why I have said Bitcoin and similar tokens are built on what is often called the greater fool theory. You are not buying an income-producing asset. You are buying the hope that someone else will pay more. For years, I have said that if there were an easy way to bet against Bitcoin directly, I would do it, because in the long run, I think it is going to zero. I have repeated in 2021, 2024, and again in 2025, that crypto does not produce anything. It is driven by hype, and even very intelligent people can be fooled. Now let us compare that to other assets. If you offered me 1% of all the farmland in the United States for $25 billion, I would write the check today. That farmland will grow corn, soybeans, and wheat, food that people need. Every year it produces something of value. The same is true for a well-run apartment building. Tenants pay rent, generating steady cash flow. Gold has the same basic problem as Bitcoin. It has some industrial uses, but most buyers hold it hoping to sell it later for a higher price. If you melted all the gold ever mined into a single cube, it would be about 68 feet on each side and worth around $18 trillion. For the same $18 trillion, you could buy all United States farmland plus a collection of large companies like ExxonMobil and still have money left over. A century from now, the farmland and corporations will have produced enormous value. The gold cube will still just be a cube. Bitcoin is gold with a better marketing campaign. At least gold has been a store of value for thousands of years and can be made into jewelry. Bitcoin is just ones and zeros. Its value is entirely based on collective belief, not intrinsic output. People respond, the dollar is just paper too. That is true. But the United States government accepts dollars for taxes, pays salaries in dollars, and requires that dollars be accepted for debts. That creates a base level of real-world demand. Bitcoin has no such backing. Its value is whatever the next buyer feels like paying. That is speculation. What about the technology? Blockchain might revolutionize supply chains, medical records, property titles, and more. But you do not need to own Bitcoin to benefit from blockchain. That is like saying you had to own random domain names to benefit from the internet. The real money was made by companies using the technology, not by people hoarding .com names. Supporters love comparing Bitcoin to the internet, but they skip the painful part. In 2000, the NASDAQ index crashed nearly 80%. Most internet-related stocks went to zero. Even great companies like Cisco took 17 years to break even for investors who bought at the peak. Amazon dropped 95% at one point. Being right about the technology did not protect you if you paid the wrong price. Or look at gold in 1980. It hit $850 an ounce, and everyone said it was going to 5,000. Then it fell 65%, and did not see 850 again for 28 years. Or tulip mania in the 1630s. Bulbs traded for more than houses. People told themselves plausible stories. Then the bubble popped, and the bulbs were worth almost nothing. Every bubble I have seen has the same ingredients, a grain of truth, early adopters make quick money, a wave of fear of missing out hits. Fancy theories appear about why this time is different. Traditional metrics get thrown out, and eventually the bubble pops. Bitcoin fits that pattern. Real technology, yes. Real early winners, yes. Sophisticated sounding stories, yes. A dismissal of normal valuation rules, yes. The only unknown is when and how far it falls. Bitcoin has already crashed 80% or more several times, from around $20,000 to about 3,200, from 69,000 to under 16,000. People who buy at 100,000 today are taking far more risk for far less potential reward. At $100, it might have gone up 1,000 times. At 100,000 for a 10 times gain, you need it to reach $1 million. While past crashes show it can still easily lose most of its value. The three most important words in investing are margin of safety. You want to buy assets for less than they are worth. What is the margin of safety in Bitcoin at 100,000? There is none. You are paying a pure speculation price. Then there is the environmental cost, which I care a lot about. Bitcoin mining uses enormous amounts of electricity, well over 100 terawatt hours per year, comparable to some mid-sized countries. A big share of that still comes from fossil fuels. The result is tens of millions of tons of carbon dioxide emissions annually. Mining also consumes huge amounts of water for cooling and generates significant electronic waste as specialized hardware burns out. I've devoted much of my post-Microsoft life to climate solutions. Through the Gates Foundation and Breakthrough Energy, we are trying to decarbonize the grid, transport, and industry. Bitcoin pushes in the opposite direction, burning energy to solve artificial puzzles. For the sake of digital speculation, that is not the future we need. Now, I know it really keeps people up at night. What if I am wrong? What if Bitcoin does go to $1 million and you miss out on life-changing gains? That is classic fear of missing out. Every time I have acted on that feeling in my life, I have regretted it. Every time I have ignored it and stuck to sound principles, I have been glad. If you take $100,000 and buy one Bitcoin, maybe in 5 or 10 years, it is worth $1 million. You have made 10 times your money on something that produced nothing while you held it. But you also took the risk it could drop 80% or go effectively to zero if instead you put that $100,000 into a diversified portfolio of solid businesses, earning 8 to 10% a year, you would likely double your money over a decade with far less risk, collecting dividends and owning real productive capacity the whole time. The Bitcoin story requires everything to go right: continued adoption, no fatal technical flaws, no crippling regulation, endless enthusiasm from new buyers. The productive asset story requires only one thing: that people keep needing toothpaste, diapers, software, healthcare, electricity, and food. The same basics they have always needed. I have been investing for more than 70 years. I've watched manias in gold, housing, technology stocks, and more. The boring approach, owning great businesses at reasonable prices for a long time, works. The flashy schemes usually do not. I did not chase internet stocks in 1999, gold at its peaks, or housing at its craziest. People called me out of touch, and I slept just fine while those bubbles inflated and burst. The goal of investing is not to win a casino jackpot. It is to grow your wealth steadily without taking risks that can wipe you out. Bitcoin might make a few more people rich on the way up, but it will make far more people poor when the music stops. That fellow who called me about mortgaging his house for Bitcoin, I told him to take his nephew out for a nice steak, congratulate him on his luck, and then ignore his investment advice. Luck and skill look identical in a bull market. You only find out who is who when the tide goes out. And then you see who has been swimming without clothes. I can promise you one thing: it will not be me. So listen carefully. Bitcoin is going to zero. Do not waste your money. Invest in real assets now and secure your future.